Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Anna Kelly. Hi, Anna.
Hi, good to be here. It's
Nice.
always so good to be with you on Wednesdays.
Yeah, folks, if you don't know, she is the reason, the only reason we have an expert series, because she came on 3 years ago and said, you know what, I'm willing to do this once a week. I'm like, wow, if we can get the one and only Anna Kelly weekly, who else could we get? Because she's wildly busy. So thank you for that.
You're welcome.
Hey, so I want to talk about what I am now going to call the housing market entering a depression. I
Yes.
don't think people really get, right? So many new investors and kind of people watching the housing market want this epic crash in prices. I don't see it coming, at least not in the near term. If you want to talk about real versus nominal, that's a different discussion,
Yes.
as John Wake highlighted in Barron's this morning. But we are, in my opinion, going to have a housing crash worse than ever in transactions, both new and existing home sales, potentially going down 50% peak to trough. And that is going to cause an economic recession. But if you are in the housing industry, agents, brokers, roofers, electricians, it is going to feel like a depression. It is going to be frozen still. It's not going to be fun if you're in that business. What do you think of that? Am I being too negative?
No, I think when it comes to single family houses specifically, we are already seeing, the starts of up to 25% of home buyers backing out of contracts, up to 25% of home buyers of new construction backing out of contracts. And historically, it's been somewhere between 10 and 11% from what I'm seeing kind of nationally.
Mhm.
So it's significantly higher, right? And as interest rates go up and affordability goes down, which is essentially what's happening every time interest rates go up, all of a sudden you can't qualify for as much of a house. And so people are falling out of contract. Now they're just sitting on the sidelines, and many are deciding to just decide to rent because they flat out can't afford it.
Yeah.
But here's the other thing. Not only do we have the headwinds of inflation, meaning the Fed is going to continue to raise rates. They're probably going to do it this week, 3/4, 1%, et cetera. Yeah.
Today.
And hopefully they announce it today or tomorrow, right? But let's say it's another 3/4 to 1%. It doesn't equate to necessarily that big of a jump in mortgage rates for homeowners, right? But it still is a significant jump. And as gas prices stay high and food prices stay high and interest rates go high, not only do you kill demand, which is what the Fed's trying to do to cool housing, right? But you also kill supply. Because what happens is all these homeowners who have very low interest rate loans on their home, there's no way in heck that they're going to sell that property to buy a more expensive property with a higher mortgage that they can't afford. So they're going to just stay in their house and not sell it. So this is going to actually make supply side constraints tighter and demand really fall. And I think that that's going to result in a lot fewer transactions, probably through at least a year from now.
Yeah. I mean, when I look again, I think I want to, because I really do believe this. The housing market is entering a depression, right? If your job or your income relies on the housing market, it's going to feel like a depression, right?
Yes.
If transactions fall 50% peak to trough over a set of time, I mean, not many, like if you're a broker with 100 agents, you probably can't feed them all, right? And if you're an appraiser, it's going to feel like the depression. So,
yes.
That's going to create lots of opportunity. But if you are in it and you're frozen with fear, I don't have a lot of good news for you, right? The last 2 years have been wildly easy to make money. The next 2 years are going to be pretty bad, in my opinion,
right?
If you're in that segment. And then everything is pointing that way. I pointed at July 20th, the National Association of Realtors report last week being kind of the event. The data's not gotten better, right? New home sales crashing more than expected, pending home sales down to, this drives me crazy. Economic analysts, right? People in the industry of, my education, which I've been trying to do for 30 years, they were calling for pending home sales to go down 1%. Yeah, laughable. Exactly, laughable. I called for double digits.
Yes.
They were down 20% year on year, so worse than I expected, and down 8.6 month on month. Folks,
right.
If you are an economic analyst and you're calling housing data and you have no experience in housing, take every guess you have and triple it. These 1% moves. It's bad. It's just it's going to get worse, and it's going to get worse.
Absolutely. And the numbers that we see today have a lag, right? Because a lot of these homeowners have been under contract for 60 days before interest rates started really ticking up. Mm-hmm. Some were able to lock interest rates. So, you know, the data is just going to get worse and worse and continue to get worse throughout the year. So to your point, there's already a lot of layoffs in the mortgage industry, in the banking industry, right? Some of these iBuyers are freezing or they're laying off. And so if you're in construction, you're an agent, you're a mortgage agent, you've got to be the best of the best to be able to survive this. And you've really got to be thinking about, you know, your career is long-term, but what else can you do to create some extra income during this time when your income will be hit significantly, unless you can just, you know, be in such a market where we're so undersupplied, and you're really serving those higher end buyers who aren't as impacted by those interest rates.
Yeah. There's just, I'm trying to wake up folks in that industry, right? I'm going to an event. I think it's the 10th and 11th or something like that, where we're going to be talking to real estate agent brokers and people, and I'm going to have to slap them, right? I'm going to have to slap them and say, your world's going to be rocked. You are now working in an industry that's in depression, and it's not going to get better for 6-8 quarters. So the whole idea, but I want people to hear this. That sounds scary. But hear what's next. If you can skill up, learn new skills. Like one thing, Anna, I've never done pre-foreclosures. I bought short sales. I bought foreclosures. I didn't have to fish in pre-foreclosures. Go there. What about sub 2? What about wraps? There's all these other ways, because again, when housing transactions crash, sometimes there are sellers who need out, death, divorce, job transfer, but they have no equity. Maybe you can find a way to help them. Because again, I think you and I both believe, and we'll talk about this in episode 2, a lot of wealth will be built with deals that are done over the next couple of years. What do you think?
Absolutely. You know, it's common knowledge to investors. You want to try to buy at the bottom. You know, we can't time the bottom exactly, but we can see signs, right? Mm-hmm. It's no longer just flashing, you know, nice and yellow. It's flashing bright orange and starting to flash red. And so, you know, when there is fear in the marketplace, that's when you start to get greedy, but you got to be creative, right? You got to think, how can I provide value to those that do need to sell and be the one that gets to buy those properties, right? How can I provide value? How can I find a unique value proposition that I might have that can help me to add on to what I'm already doing and add another skill that allows me to continue to go? So like you mentioned, I have a partner that I own a couple of hundred units with here locally, and he weathered 2008, right? Well, they were home builders, and then they started, okay, well, now we're going to wholesale deals, and now we're going to start an agency. And so we're going to take advantage of the fact that there's lots of different ways to make money in real estate. Let's do the things that are going to keep, you know, food on the table, and then just add and pivot. And then as things start to change, you may scale back on certain things and add back on certain things. But being malleable, being resilient, getting creative, it's critical for anyone that's in real estate.
Yeah. So let's close on this, because we're going to talk a lot about that in episode number 2. The National Association of Realtors, NAR. This, again, I have to chuckle. This is just comical to me. So they just published that pending home sales are down 20% year on year, down 8.6% month on month. They're now admitting for the first time that housing transactions will be negative this year. It's about time. It's only July. But they're saying they think it'll only be down 13%. Again, this is an organization who obviously skews bullish.
Yes.
You know, I think it's very likely, because again, we did 6.9 total transactions, 6.3 existing. I think there's a good chance we're in the low 5s, and maybe even get in the high 4s this calendar year, but it gets worse next year. What do you think of that?
Yeah, I agree with that. As long as the Fed can't kill inflation, and they can't do it in 6 months, right? They're going to keep raising rates, and then they're going to try to keep the rates neutral for a while. So that means elevated rates, probably 6 months, you know, beyond when they reach neutral, if you hit deep recession. If not, they may keep them elevated for a little while. So we're already seeing in some major markets almost 50% of homes on the market having price cuts, right?
Mm-hmm.
And people backing out. And that's just going to continue to get worse. So know your market. We talk about this all the time. You preach this all the time in your course. Like, you need a buy box. You need to know your markets. Don't jump all over the place or just look at national data, but see the red flashing signs and then go look at your market and you watch like a hawk every single day. How many houses are on the market? How long is days on market? Who's the motivated sellers? And you start seeing that. And then you think about, how can I capitalize on the motivation? Where can I buy? And buy at the right price point, right? Because certain markets, the prices are still significantly above what the wages can actually afford to continue to pay.
Mm-hmm.
So in those markets, you might actually see decreases in prices. I don't think the prices are going to crash. I think they're going to be flat. And in some markets, they will come down quite a bit. Boise, Idaho,
Oh yeah, Boise,
San Francisco, Seattle, Washington, potentially Austin, Texas for single family homes. So you've got certain markets that are going to perform very, very differently. But I think I could confidently agree with you that nationwide, you're going to see a significant decreases in transactions and volumes. Then you got to get granular to figure out what's that going to do to prices and how do I capitalize in that particular market.
Absolutely. Well, do me a favor, Anna. We're going to talk about in episode number 2 how you have prepared to take advantage. But before we do, where can they find you?
Great. You can find me here every Wednesday. You can find me on my playlist here on Michael's amazing YouTube channel. You can find me on social media at Anna Kelly REI Mom, and my website is reimom.com.
Thank you so much.
Thank you.